Welcome back to Explain the Charts, where we decode complex market movements to give you actionable insights. Today, August 5th, 2025, we're focusing on Microsoft, ticker Microsoft, a stock that has seen some exhilarating highs and a recent, sharp reality check. The news cycle around Microsoft is a fascinating mix right now, presenting a clear dilemma for investors. On one hand, Microsoft just reported stellar quarterly earnings, blowing past analyst expectations, largely fueled by its booming Azure cloud and aggressive push into AI. The company even recently crossed an incredible $4 trillion market capitalization, solidifying its position as a tech titan alongside NVIDIA. Analysts remain largely bullish, with a consensus, moderate buy, and an average 12-month price target near $610. Microsoft is heavily investing in AI infrastructure, planning over $30 billion in capital expenditure for the next quarter alone. However, there's a flip side. Valuation concerns are surfacing, with some analysts suggesting a potential pause in its rapid appreciation. Crucially, recent reports also indicate Microsoft has abandoned significant data center projects due to oversupply and, specifically, a decision not to support incremental OpenAI training workloads. This last piece of news, though not widely publicized, could be a key factor in the stock's recent volatility. Now, let's turn our attention to the daily chart to see how these events have played out in price action. Looking at the broader picture over the past few months, Microsoft has been in an undeniable, strong bullish trend, rocketing from a 52-week low of $344.79 in early April to an all-time high of $555.45. This remarkable ascent highlights the market's enthusiasm for Microsoft's growth story, particularly its AI ventures. The consistent higher highs and higher lows clearly indicate a healthy uptrend, attracting significant investor capital. The volume has been generally robust, supporting the validity of this upward movement. However, a critical moment occurred around July 31st. We can observe a significant bearish reversal candle right at the 52-week high of $555.45. This sharp decline, accompanied by extremely high volume, strongly correlates with the news of Microsoft abandoning data center projects and pulling back from some OpenAI training support. The divergence between the strong earnings narrative and this unexpected operational news seems to have triggered a profit-taking wave and a reevaluation by the market. It's a classic example of how specific, even if seemingly minor, operational details can override broader positive sentiment, especially when a stock's valuation is already stretched. This single candle tells us a lot about the sudden shift in market psychology. To grasp the immediacy of this shift, let's zoom into the 15-minute chart for July 31st. Here, we can clearly see the rapid price depreciation shortly after the market opened around 13:30 Universal Time Coordinated. The candles are predominantly red, with heavy selling pressure pushing the price down from near $555 to the low $530s within hours. This granular view reveals that the market reacted swiftly and decisively to the news, indicating that the abandoned data center projects were a major concern for short-term traders. Notice how multiple consecutive candles show strong downward momentum, confirming the sudden bearish sentiment. The high transaction counts during this period underscore the intensity of the selling. The lowest point reached on this day was $531.90, which now serves as a crucial support level to watch. Transitioning to the 1-hour chart, let's examine the price action immediately following that sharp July 31st decline, spanning into early August. After the initial crash, Microsoft entered a phase of consolidation and attempts at recovery, yet struggled to reclaim its prior highs. The stock spent August 1st and August 4th, the last full trading day before today, trading mostly below the $540 mark, consolidating around the $520 to $535 range. This indicates that while the immediate selling frenzy subsided, a significant portion of the market is still processing the implications of the data center news and the broader valuation concerns. The formation of lower highs on this time frame suggests that the short-term trend has indeed shifted to bearish, at least temporarily. The bounce we see on August 4th, with the stock closing at $535.64, is a positive sign but needs to be evaluated in context of the overall recent downtrend. Returning to the daily chart, let's identify the critical price levels for Microsoft. The all-time high of $555.45, established on July 31st, stands as a formidable resistance level, a clear reversal point. Immediately below current levels, we have key support at the August 1st low of $520.86, which is crucial for short-term bullish hopes. Further down, the July 29th daily low of $511.56 offers another layer of support. Should these levels fail, a significant psychological and technical support zone exists between $490 and $500, which previously acted as resistance during the May rally and could now turn into support. Long-term, substantial support can be found near the $430 mark from mid-May, and even stronger historical support in the $390 to $400 range from April. Understanding these levels is paramount for setting stop losses and profit targets. So, are we bullish or bearish on Microsoft? There are strong arguments for both sides. For the bulls, Microsoft's core business remains incredibly strong, as evidenced by its robust earnings and the undeniable growth of Azure. Its leadership in the AI revolution, backed by massive investments, positions it exceptionally well for long-term growth, a sentiment echoed by the ambitious analyst price targets around $610. Furthermore, the previous sharp dip in early April 2025 was followed by a massive and sustained rally, suggesting that Microsoft has a history of bouncing back strongly from corrections. If the market perceives the data center issue as a temporary hiccup, or if Microsoft announces new, positive AI developments, we could easily see a rapid recovery towards $555 and beyond. Conversely, bearish arguments cannot be ignored. The primary concern is the stock's stretched valuation. Its price has simply outpaced earnings growth, making it vulnerable to negative news. The abandoned data center projects, specifically linked to an oversupply and a pullback on OpenAI training workloads, reveal underlying demand concerns for their cloud infrastructure, or at least a miscalculation. Adding to this, NVIDIA's upcoming next-gen data centers are causing a holdback in purchasing decisions, which could further impact Azure's near-term growth. OpenAI's delayed profitability until 2029, despite impressive revenue, highlights the enormous capital expenditure required for AI, which might temper some of the hype. If these concerns intensify or if there's any perceived slowdown in AI adoption or cloud demand, Microsoft could see further downside, especially if key support levels are broken on high volume. In conclusion, Microsoft stands at a pivotal point. For short-term traders, watch the $538 to $540 level as immediate resistance. A break and hold above this, especially on increased volume, could signal a recovery towards the $555.45 all-time high, with a 40% likelihood, reinforced by new positive AI news. However, a failure to break $540 or a break below the $520.86 and $511.56 support levels makes a retest of the $490 to $500 zone highly probable, with a 60% likelihood, especially if more negative news on data centers or AI emerges. For long-term investors, the fundamental growth story driven by AI and cloud remains compelling, suggesting a move towards the $600 plus analyst targets is highly likely, perhaps 80 to 90%, provided no major structural changes occur. Keep a close eye on Microsoft's next earnings report for updates on Azure and AI segments, any further announcements regarding data center expansion or contraction, and broader macroeconomic data. These factors will be key in determining whether Microsoft reclaims its bullish momentum or enters a deeper correction. Thank you for watching, and remember to like, share, and subscribe to Explain the Charts for more in-depth analyses.